So with that, the agenda is to let Stephen Burke lead us through talking about global economies and the divergences, and then we'll have a spotlight on Buffalo, the rise, fall, and rise, and then data analytics on the cannabis industry.
Thanks, Mark. So I guess it was around this time last year, I was highlighting in these weekly meetings that I thought there were three big inequalities that we're going to be dealing with. Aside from the obvious income inequality that gets so much press, I thought there was going to be significant company and country inequality. And I think we're starting to see that now. So I want to talk about why we have some of those divergences, or why I think that we have some of those divergences, and what I think it means going forward. So there we go. So the IMF had and the World Bank had their spring meetings, and they came up with updated economic projections. And I think the rebound is quite exciting that we're having this year, and even into next year. Growing at 4.4% isn't too shabby for considering the damage that was done. But there are bigger divergences in these numbers between the advanced and emerging markets, and even inside each of those two very different stories. China, obviously, in the emerging market category, certainly isn't one anymore, but isn't acting like one either economically. And then the US is doing quite well versus parts of Europe that aren't. So we'll touch on that. One of the interesting things as they look at their projections going forward is the output gap, the difference between their actual and potential economies. It's showing that as you fast forward to 22 to 23, the US and Canada will be back above those levels. That may be a little optimistic on Canada, given their problems with getting the vaccine right now. And then you can see down below, I think China's number is probably going to be off on this, and they're going to be positive as well. But it just shows you the difficulties of what last year was, and then also how difficult it's going to be for some of the emerging economies and developed economies to get back to where they were. So why is that? I think you have to start with where was the economy coming into COVID? And we were at a multi-speed economy at that point. And I think the divergences are exacerbated by the starting point, because it allowed those with strong economies, allowed them to put money to work very aggressively from a fiscal and monetary response. And the size and scale that the US put forth, we've talked about, is massive, and we're not alone. But the countries that were having troubles coming out of the financial crisis were still lagging, and it was very hard for them, given their financial situation, to make the big financial commitments to move forward. And they also, in many cases, because of their financial conditions, didn't really have strong healthcare systems, which allowed a more difficult response. But I think the troubling thing, and Bill, I saw this the other day, and I'm curious to get your feedback on it. Bloomberg reported that the 27 wealthiest nations received 40% of the world's vaccinations, but only account for 11% of the global population. And it gets even worse when you dig down into a lot of the other countries, particularly on the lower end of the economic strata, where you can see nearly half of those have not vaccinated 1% of their population. So you're going to have these divergences because it's hard to get back to an economic activity if you're locked down. So that's a big issue. So in our view, it's a two-horse race right now, with the US and China leading at the first turn. We are China more so than the US last year, coming out of it and rebounded quite strongly. The US is rapidly moving up. And we're on pace to cover 75% of our residents with vaccinations in the next 3 months. And I saw that on Sunday, I think we did about 3.6 million vaccinations. I mentioned Canada's having trouble getting their vaccinations going, and Ontario's locked down yet again. And they could vaccinate at that level at 3.6 million people. They could do their whole country in about 11 days. So it just shows you the access to the medications and the vaccines are really challenging for certain countries and less so for others. And that's going to create even greater divergences. So when you start with an ineffective healthcare system and layer onto it that you can't provide monetary and fiscal support in a crisis, you lead to a lot of economic scarring, which I'll touch on a little bit later. But overall, the global economy has bounced back quite a bit, and you can see the rebound here, whether it's industrial production, manufacturing, new orders, new business. from the services economy is starting to come back, and you can see world trade activity is still high. So we are on the rise, but what I fear is that the rise is going to create even greater divergences between the haves and have-nots on all three of those levels: country, company, and individual. So here's another look at the sub areas in the advanced economies and developed economies. And you can see the very different speeds. But I think that the projections don't, they're just that. And the IMF has no greater insights than anybody else. They might have a little more access to information in the emerging economies because of their lending activities. But for us, this sets up for an interesting opportunity from an investment perspective and a challenging one for policymakers to deal with the divergences that we think are going to exacerbate. So this is just another look at the difference of vaccinations and the process between the emerging economies. And when you see that most of the emerging market economies will not be vaccinated before 2022, that really sets us up for not a great situation globally, and will make it even harder on a lot of those nations. And we think it flows through beyond just the health issues. It gets into the youth population and what their opportunity set looks like. So this is a chart you've seen from Johns Hopkins, and the US is the top in the orange, and we spiked and come back down, and now we're starting to do much better on one hand, but also worse in some ways, in that more vaccinations, but caseloads are not quelled the way they should be. But the real concern is countries like India, which are seeing a skyrocketing number, or Brazil, Argentina, Iran. Those countries are really struggling. So this is a look at India, and that's a pretty telling chart for a challenge with the second largest or largest population in the world. Brazil also a similar rise in cases, which has all sorts of social and political implications. So how do we think about it? Well, the impact of scarring is a big issue, and Janet Yellen's talked about it a lot. Powell's talked about it, and the IMF is talking about it. And the way we think about it is, you have persistently high unemployment, which leads to also low job finding rates, and you start to lose part of your population as a loss of human capital and disengagement from the workforce. You end up with lower labor force participation rates, creating greater strains on government, and also bigger gaps between the haves and have-nots. You also have lower investment levels for a lot of those countries that are struggling, which then creates an additional challenge that their debt loads aren't being reduced. You get slower to capital accumulation, slower tech adoption, and slower productivity growth. And we know the game for a lot of these nations with population problems is you need productivity growth to go. So that's a challenge. Another element of the scarring is you start to lose sector-specific knowledge as industries transforming, bankruptcies grow, and then that reduces productivity growth again. And then the loss of education during a pandemic. And this is one of the key elements of scarring that you're starting to see, where students are out of school in less affluent countries, and therefore they don't have the broadband access to work from home. So their learning gets set back. And then you end up with this human capital problem that you start to see big divergences. And it's not just the poor nations, it's poor neighborhoods as well in the US and other developed world. And then you end up with misallocation of resources due to these changes in demand, and it's hard to make long-term planning a possibility in the certainly non-autocratic nations. So that creates the scarring, and that's what Janet Yellen and others are really focused on, is the long-term implications of this. What the IMF is saying is the US is going to have very little scarring as a nation, but that doesn't tell the story for the pockets inside the US, whether it's minorities or women, single mothers. Those are real trouble areas that we're trying to address with policy, but we have to be more thoughtful about how we do that, in my opinion. On the other hand, there are some positive signs. The US returning to above pre-COVID levels in around 2024 is actually quite strong in terms of their growth projections, where our rebound has been really quite good. Economic activity is rebounding quickly, both here and in China. And as those two countries grow, they can really drive a lot of the other activity around the world. Innovation and tech adoption is accelerating, and that's hard to believe after the year we had last year, but we think we're in the early stages of another tech acceleration. And this pullback that we had in the equity markets in the US of the big tech names, we think is going to be short-lived. And you can see what Microsoft did yesterday, making the acquisition for $16 billion of Nuance, just shows you how far ahead some of these very well-capitalized tech companies are and how they're going to actually expand their difference in positioning in the market. The worst hit sectors tend to be lower productivity ones, which actually could allow the economies to shift to higher productivity opportunities, which is good for the economy over the long run. And then places where we have stranded capital, like downtown office space, what's the potential for repurposing and how does that become actually a stimulus as opposed to a negative? And I think, Detroit was a good example of a transition that occurred over time, but could be a model for what Dan Gilbert and others did there. And you're seeing a similar thing in Tampa, where there's a lot of transitioning going on with new business, but we think the repurposing of cities could be actually an interesting opportunity. I do think there is scars that we're going to see in it, and a lot of it is around youth unemployment, and this is advanced economies. And they looked at the average for 18 to 19 and then the change in 2020. And what you can see is this is not great in the advanced economies for youth unemployment, and it's lowered their labor force participation rate. And the longer they're out, the harder it is for them to get back and become really fully productive members of society. It's even worse in the emerging markets. And we think this is a big problem, and disenfranchised youth tend to be very, not only a negative on the economy, but they can get destructive in their behavior. And part of the issue here is being attributed also to the opioid crisis, which is really knocking out big chunks of the labor force. So it's not just an economic issue or a health issue or a social issue, it's all of them combined, which makes the policy prescriptions much more difficult. So our takeaways are country inequality remains high. Capital flows are going to favor only a few of them. That's going to create some challenges where countries are going to see capital outflows, which will mean more capital controls, particularly in emerging economies. Turkey was one that kind of jumps off the page as cryptocurrency use is rising there, and that's the last thing that economy needs. It may be the right thing given the way they've run their country, but it's the last thing that that country needs, because then you start to have unproductive capital. Not that it's not helping the owners, but you're pulling money out of the system, not a good thing. The countries that have been strong also have better healthcare systems typically and more innovation, which creates significant economic advantages as we move forward, particularly since we're of the view that pandemics will not be as rare as they were previous to this one. So it really means be highly selective. There are growing concerns about overheating in the US, and as people know, we've been in the transitory camp. Clearly the White House, the Treasury, Congress, and the Fed are not in the group that's worried about an overheated economy. What we're concerned about, and when somebody like Larry Summers reverses his view and becomes a conservative when it gets to fiscal stimulus, that should be a warning sign for people. And I think he's a pretty progressive and thoughtful thinker, but he's actually trying to put the brakes on what he thinks is excessive progressiveness, I think, in the policies and in the scale of it, and is arguing for more targeted opportunities. I think that would be the case from people like Byron Wien and Ed Yardeni, who thought that we might have gone too far. And that's going to be interesting to see how this plays out with the infrastructure and other stimulus. We're keeping a close eye on the inflation risk. It's going to rise, and we think that's okay. But it's still likely to be transitory in our view. And what we are very careful about is the market's perception of what the Fed will do versus what the Fed says they're going to do are very different things. So the market thinks they'll overreact to short-term inflation. And if they looked at other countries like Japan, that won't be the case. So they're not going to, in our view, move too early. They'd rather see it run a little hot. And we think the early inflation is going to be very positive inflation. So Mark, with that, I'll stop and open it up to discussion.
Hey, Stephen, this is Jerry. Thank you so much again. You mentioned there should be more of a thoughtful approach on process to the scars, the internal scars. in our country. You addressed a little bit of that on education. What other things should we be doing? I mean, for goodness sake, we're throwing $4 trillion at this thing to fix it. Why can't we address what is sort of a glaring discrepancy here?
Yeah, I think in the effort of governments to allocate funds to try and be fair, they allocated it to most instead of to the people most in need. And there are ways to do it that they just didn't do, either because of timing. On the first round, that was a timing issue. That they acted fast and were aggressive, I think, is fine. It's the subsequent rounds that should have been more targeted, and they haven't done that. When you talk about, helping, reduce the inequality, the best way to do that, and if you haven't had a chance, read Jamie Dimon's letter. It's 66 long pages. I spent a good chunk of Sunday going through it. His policy prescriptions are really, really good. He doesn't make it as narrow as I think it should be in terms of helping single moms out is a separate issue that needs to be addressed. Minorities should be addressed differently than we are. And this one size fits all kind of approach is just, it's wasteful. And it's hard politics, but that's their job. But they took the easy approach. And we think you have to be much more targeted in your spend. And the same thing with infrastructure spending. You have to have the federal government finance, but state and local governments really be more targeted in what their biggest needs are instead of trying to be everything to everyone.
Thank you.
Other questions, comments?
On to the next show, Mark.
Okay, well, let's segue. You talked about Dan Gilbert, what he's doing in Detroit. I'm not sure Kevin Christner is the Dan Gilbert of Buffalo, but
I have the Dan Gilbert of Buffalo on the line, who is Jack Greco and who is going to be talking. So I brought Dan Gilbert with me.
There you go.
Fair enough. Well, I've been to Buffalo many times. I've been there when it's been 0 degrees on the river. We're trying to figure out how to bring frac sand. Do you remember that, Kevin?
Oh, yeah. We were in the old grain silos. It was 0 degrees.
Yeah.
Being in a concrete grain silo, there's nothing colder than that when it's 0 degrees.
Well, so Kevin Christner was my first intern upon moving to New York from Moscow. And he was doing this. I was like, what are you doing on your computer? I was like, and it turned out it was Facebook. So he turned me on to Facebook early as well. So this is all part of the next gen teaching us. And he showed me a deal. We should have done it. It went public. And then he became a head of a family office, which all my interns become the head of family offices. So, and now here he is, Buffalo. Put a spotlight on it for us, sir, Kevin.
Sure. And so I actually hired my first Denison intern this year. Mike can say hello, and he's now my chief of staff.
Nice to meet you.
So, paying back Mark's kindness from many years ago. So let me just get my screen shared here. So I'm going to give you the quick story of the history of, I guess you could call it the rise, fall, and hopefully rise again of Buffalo, New York. So this is an overview about 1880. Some embarrassing good pictures. That's me shaking hands with Vladimir Putin in London, England in 2000. That's how I convinced Mark that I was the best choice for the job amongst the Denison interviewees. And we worked on an LNG project together back in 2014 and 15. So there's us with T. Boone Pickens. So let's go back. 1901, Buffalo has more millionaires per city or per capita than any city in, we believe, the world. And you can see the Albright Art Museum has already been constructed, largest foundry in America. Vast majority of the grain coming west from the northwestern states, or I'm sorry, coming east from the northwestern states would have gone through the Buffalo Harbor and through the grain elevators in Buffalo. And then, of course, we had the Pan Am Exposition in 1901, where President McKinley was assassinated and Theodore Roosevelt was then inaugurated as president, actually probably not much more than 3 blocks from my house here. So Buffalo actually turned into the global leader in aircraft production by 1945. Both Bell Aircraft and Curtiss Wright were local companies or pseudo-local companies. Curtiss Aircraft actually came from the Finger Lakes area. And you can see over on the right, America's first jet fighter and the X-1, the first aircraft to break the sound barrier, were both built in Buffalo, New York, and had their first test flights in Buffalo, New York. I won't go through the entire collapse of Buffalo over the next, call it 30 years, because we could talk about that for hours. But what I will say is by 1980, we were reduced to talking proud, and this was the ridiculous public service announcement that they tried to get people in Buffalo to feel good about themselves.
Buffalo's got a spirit, talking proud, talking proud. Listen up and you'll hear it, talking proud, the good life that we share with nice people who care. It's time to tell them all we're up and standing tall. Buffalo's got a spirit, talking proud, listen up and you'll hear it, talking proud, talking proud.
So that talking proud logo, they actually made stickers and put them on every street sign all over Buffalo. So everywhere you go now, the stickers have never come off, but they're like almost completely faded and you can't tell what they are unless you stick your eyes up, but the stickers are still around 30 years later. So then the 1990s, we managed to lose 5 professional sports championships, including the infamous wide right, and then the Brett Hall skate gate no goal, where in the NHL at that time, you could not have a skate in the crease when you hit the puck. So the statistical odds of that are 3.25%. It's pretty great. The 2000s intentionally left blank. Absolutely nothing happened except it snowed a lot. And then I come to my little part in the story. 2012, a bunch of guys decided to start a co-working space, and we sat around talking about starting startups. And at that time in Buffalo, if there was $1 million of, call it angel money, raised in any given year, like that was like a lot. So then 2020, we have our first home playoff game, and this is not from this year, but I wanted to include co-ed table smashing. The Bills are very famous for table smashing. And when people make fun of us, we donate lots of money to that person's favorite charity. So here's the Bills table smashing video. Come to a game. And if at first you don't succeed, try again.
This is Buffalo. This feels
so, literally Home Depot and Lowe's, everyone around the stadium stocks up with like hundreds of tables, and they sell out tables, and hundreds of tables get smashed in the parking lots and people's backyards every weekend. So some pretty cool stuff happened. 9 years later, my guess is the total amount of capital raised for what we'll call startups in Buffalo is over $500 million at this point, including a recent IPO of ACV Auctions, which now has a $5 billion market cap. I was the CFO sequentially of 3 startups that raised about 40 million while I was there, and I have raised probably double that since I've left. And then last year, I also helped the SEC and FBI shut down a $50 million Ponzi scheme. So I'm sitting around waiting for my Dodd-Frank SEC whistleblower lottery ticket award. So I'm going to turn it over. Well, and it's not just a few names. So Square is could quite possibly be the first Black-owned startup unicorn. I think their last round, Jack would know, was very close to $1 billion, and several other companies raising substantial capital and hiring hundreds of people in the area. And this is really just the start. So Jack, if you want to say a few words, if you want to know what's going on in Buffalo, Jack knows just about more than anybody else about, you know, what you're working on both in the startup side, and I know you've got some cool real estate stuff too.
Yeah. So, hey, Kevin, thanks for, inviting me on this. I'm similar vintage to Kevin. I'm not originally from Buffalo. I'm from Canandaigua, about an hour and a half east of here, in between Rochester and Syracuse.
Right by Curtis Aircraft.
Right in Curtis Aircraft.
Listen,
Right.
I thought I saw you on that video, but I guess that wasn't you.
I was at that game. I was at a different place, smashing a different table. I'm a pretty rabid. I decided to wear my Buffalo Bills Grateful Dead shirt for this, because we're proud here. We are. But yeah, so when I left ACV, I'm still in a lockup period, but I had taken some secondary. One of the things we don't have in Buffalo is a large number of angel investors, right? Kevin, I actually met Kevin when he made an angel investment into a company that I was the CFO for a while ago. I've been around venture my whole life. I said anything I took out of ACV, I was going to put back in. So I've taken out about 6 million so far, spread that across 60 deals. Personally, checks as small as 2,500, checks as big as $1 million. We'll see how the portfolio turns out. It's going to be interesting. Luckily, some of the big ones are doing okay. But like of those companies that you saw up there, 2 of them, to give you an idea, like we're growing up as an ecosystem. 2 of those companies, Tackle and High Operator, I'm the only angel from the city of Buffalo that doesn't work for the company that's in those, right? So like we're trying to mature these businesses. Everybody's having to leave for capital. So what does that create? It creates an opportunity where like there's a couple guys like me that cut a lot of checks that get in on stuff. But like until we start having capital start to come here, right? It's going to keep leaving, right? So it's going to be getting in the hands of the VCs. I mean, you saw Bessemer that was on there. Bessemer was the lead investor in my company. I ended up connecting them with Tackle, and that's what they ended up leading 2 rounds after that, and then ultimately co-led with Andreessen Horowitz. So like, if you guys are in the area, there is a lot of interesting things going on in Buffalo. I mean, the original pitch was you can get, like Series A companies at pre-seed valuations. We're trying to break that, but that still ends up being kind
True.
of like,
Yeah. You see the crazy valuations out in Silicon Valley on stuff that is PowerPoints. If you want to come see people tackling real problems with real, solutions and traction at reasonable valuations, Buffalo is a great place to be.
So we need a Buffalo roundtable.
yeah.
As we go. Stephen Burke goes to wherever I go. So get ready, Stephen. We're going
So
to Buffalo.
And my wife's a Niagara graduate, so.
See, there you go. It's always 1 degree. But like to give you an idea, Okta, which is the second company under their marketplaces, I just did a $250,000 investment in them. They do 8 million GMV and drop $1 million to net revenue, and the investment was like a 7 million pre. Right? I mean, you can still find deals like that around here. So there is more and more of it happening. I run something called the Buffalo Bridge, which goes out to about 1,000 founders. We have over 600 startup founders between Buffalo and Rochester, companies that have raised some level of capital. So when you guys are around, Kevin knows I will always show you around. I'll take you.
We are very friendly people here in Buffalo, right? And one of the other nicknames is the city of good neighbors. And the reason is we have to help each other dig out from 7-foot snowstorms on a regular basis, right? So it is super important to be friendly with your neighbors. So literally you cannot fly between New York and the West Coast without flying over Buffalo. So it's a very easy stop. Everything in Buffalo is no more than 20 minutes away. And that is absolutely true. From any location in the Buffalo metro area,
So-
you can make it anywhere else in 20 minutes.
Can you segue? Because we're going to move on to cannabis real quick.
Yeah.
What do you do?
So I'll just skip through some of this stuff. We are a world-class cultural city, and we're currently building a $200 million expansion to the Albright Knox, which has one of the best art collections in the world.
Yep.
And this is the project I'm working on that sort of relates to cannabis, where I'm purchasing a 16-acre brownfield site over on the east side of Buffalo, which is the poorest area in Buffalo. And we think that we'll get over $100 million of New York State tax credits for moving companies onto the site, as well as this is a federal opportunity zone and, all the other check boxes that you would like. So when this building was built until the 1920s, it was the largest foundry in North America. And you can see some internal pictures of the stuff they used to build in there. And a little bit of drone footage.
What's the cannabis angle?
So that building It is so strong. This is a 250,000 square foot industrial building. I'm planning on adding 750,000 square feet up vertically that we can use for cannabis, indoor ag, really anything you want. But the kicker is every dollar that a company comes in and spends in CapEx, the lights, fixtures, racks, whatever it is, New York State cuts you a 20 cents on the dollar check. So your cost basis of anything you buy is 80 cents on the dollar. And I mean, you can't get much better than that. And then it's the Excelsior credits where you get 6.85 cents for every dollar of wages that you paid rebated to you directly from New York State. And those are all refundable. They can all go into your pocket.
Kevin, and if you could just give your contact information for people to reach you. Obviously, you're I hope you're on the app.
I think I'm on the app, LinkedIn, Kevin Christner. You know, we have the money in place. What we're really looking is mostly how to program the building, right? I mean, we've got 750,000-ish square feet and a chance to do a lot more too. So,
well, well, there's a lot to do in Buffalo. I can attest to that. So we'll be there.
Yeah. So come reclaim our future with us in the city of White is my pitch.
Over to you, because we have another special guest here to shed data analytics on cannabis.
Yep, thank you, Mark. And Kevin, you know, we'll be in touch also on the cannabis front. One of my partners is in the cultivation side, so I'll be making that introduction pretty soon.
Thank you.
And I went to school at University of Rochester, and my best friend is from Orchard Park, so lots of connections with you in that area. So I'd like to switch focus on sort of the cannabis theme here, but on the data side now. To Jim Francis, who's joining us from CRB Monitor. And, you know, I'll just, as a way of background, say that, you know, the platform today is very intriguing. I have a background in data science, and I'm starting to get to know the product in more detail, but I'll turn it over to Jim to give the overview. I think there's a lot of usefulness for the kind of information that CRB has been able to put together over the past, is it 6 years or so, Jim? 6 years?
Yeah, kind of going on 7.
Going on 7. So,
yeah.
which in cannabis terms is, you know, decades in cannabis years. So I'll switch it over to Jim to give the overview, but you know, we're very interested in having CRB here to speak and digging deeper into their data.
All right. Well, I'll try and keep this kind of brief. And thanks, Anand, for the invite. I thought all of this has been very interesting today. You know, I do have a background in asset management that goes back to the sort of late 1980s, which doesn't date me. I was, you know, like 5 years old when I started in the industry. But so I got into this business with the CEO, Steve Kemmerling, about 1.5 years ago. He brought me on board because he had developed this really great platform that kind of defines the cannabis ecosystem from the license level up, which was unique at the time. And he built this platform for 2 reasons. One, so that anybody who was banking cannabis could easily identify businesses that they could actually reach out to, and also individuals that they could reach out to for their own purposes to try and do a better job of banking cannabis. But also the other use case that came up was in the area of anti-money laundering and compliance and KYC. And so he had sort of this instant client base that made up of lots of sort of medium-sized banks and credit unions that were looking to sort of monitor cannabis investment and be able to identify individuals that came in and wanted to do business with their banks. And there was obviously restriction on doing that. But a couple of years later, his larger institutional clients, he had built this business, you know, from the ground up, and started to get really big clients like, you know, State Street, Northern Trust, BlackRock, et cetera. They were looking for securities information because now they're looking to do more like pre-trade compliance at the security level. So he very quickly started to develop the platform CRB Monitor for securities. And so what you have now is really the purest definition of the cannabis ecosystem. It's agnostic. Basically, every single security in our database, we have about 1,320 today that are issuers, about over 1,500 securities. It's global. And what we feature is the linkage of those companies to the cannabis space. So every single record is what I would call the sort of the proof statement of why a company actually can be defined as a cannabis related business. What we feature that is unique, and I think it's sort of copied by a number of people, is the tier ranking system. So every single security that's in there and every single company and private business, we have about 45,000 private businesses in addition to the 1,300 issuers. Every single one of those is assigned a tier. So tier ones would be the ones that are directly associated with cannabis. Tier 1As would be plant touching, licensed businesses. Tier 1Bs would be investors or owners of tier 1A businesses. And then tier 2s would be suppliers of goods and services to tier 1A businesses and also pure play CBD companies. And then tier 3s would be sort of incidentals like CVS and Bed Bath & Beyond and Molson Coors, where they're using CBD or doing business with the cannabis space, but it's just an incidental business for them. What we have found though is, in addition to the use cases that I've told you about, which is more sort of compliance driven, we are now seeing quite a bit of interest in the security side of the database. People who want to build investment products, indexes, because the data is so complete, there is integrity, and it's also, has that complete corporate structure underlying. I mean, if I could share for 1 minute, I can show you what one of these looks like.
Yeah, go for it.
Okay, let me do that quickly so that let's see, I'll share. So a page in our database. So if I look at TrueLeave, which has been a fairly interesting topic for our clients and prospects, they always want to see something related to TrueLeave because it's kind of a success story. When you pull up the profile to TrueLeave, you get some detail on what their business is. You have their tier, as I explained to you, that's their sort of level of risk or exposure to the cannabis industry. And you see how TrueLeave is actually tier 1B because they do not directly have any licenses. They just have them through their subsidiaries. What's interesting here, then, we get their sort of summary information, which is their address regions, but also their license regions. As I mentioned before, all of this information is built from the license level up. And that's why, there's just such a tremendous amount of integrity because we go out to, I think now we're up to 85 or so license authorities in the US and Canada. And we also have some outside the US now that we're pulling license information from. The securities that are related to TrueLeave, we now have 3 different securities. There's convertible bonds, warrants, and the common stock. But then what our clients really love about our database is this corporate structure, which now we define above and below the entity. So above, you see all of these individual owner investors, UBOs, companies that hold some shares or have some equity stake in TrueLeave. Then we have it here described. All of these are hyperlinks though, but also very interesting would be the corporate structure that underlies them. And this is where my research team, spends pretty much the bulk of every single day building out the corporate structures of all of these companies. So if I want to take a look at some of these subsidiaries, I can just, click on these. But this is where our our customers are really drawn to the database because, again, it's purely agnostic, and it's just this incredible depth of information. And so, now I can see the structure that underlies this subsidiary and where their licenses come from. So these guys have a license in Georgia. So, it's just again, the purest form, I would say, of the sort of the definition of cannabis as a business. And I think essentially, maybe unintentionally, but we've built out this visualization of the entire, cannabis ecosystem. So I don't want to take too much more time, but if there are any questions, I'd be happy to.
I think what we'd really love is to see some of what your views are, your data-driven views in our summit. Or maybe Anand, you're working with Jim to do that.
Yeah, and so one thing that I'll add too is that besides that sort of pure data-driven market intelligence, we also write a newsletter every month that we post to our website, and other what I would say fairly interesting blog posts that are timely. We're keeping up with it because we kind of have no choice. I mean, we're sort of knee deep in the cannabis space on a daily basis, so we really get a kick out of sharing all of this information with the world. But be very happy to discuss further with anybody on this call that would like to take a closer look, and very happy that we're able to present and participate in the summit as well.
Yeah, from my point of view, looking at it, I can see definitely the applications for the bank compliance department usage. I used to be at Morgan Stanley, and I would get reports on who's investing in cannabis and have to dig into things. But from the investor point of view, it really can speed up due diligence. Just knowing public and private entities and how their ownership structure and licensure ownership is structured. So from my view so far, from what Jim has shown me, that aspect is very intriguing. And I think it's very useful as, Bar Capital also in particular kind of thinks through M&A activity that's going to happen in the space, already is happening in the space, and potential for connecting the dots with, folks that obviously are part of the 361 network and other cannabis participants. So I tested out actually some of the names from the panel, or one of the names from the panel with Jim when he was doing the demo, and kind of was verifying kind of because they're one of my partners, and was verifying more info on them. So I'm really intrigued by the data set, and I think based on what Jim and Stephen, the CEO, have mentioned on their plans, I think it's going to be a very critical tool in understanding the cannabis space.
Yeah, I appreciate that, Anand. I mean, right now I'm sort of getting into building, risk models and indexes, sort of thinking about all kinds of sort of next generation use cases for this data, because of the integrity, because of the depth, and that you can look through to, the license types and license statuses and individuals, that you're able to build, lots of things off of this that are not necessarily that, AML use case. But I do appreciate your allowing me to participate today.
James, I have a question for you. Have you considered, or have you already had outreach with some of the forming exchanges, particularly for cannabis? Are you familiar with any?
Yeah, I mean, and that's sort of my experience, goes back, many, many years in asset management, and also, in research, particularly in equities and quant. And yeah, we do. I've got relationships with pretty much all of them. And so we've been actually talking to one lately, particularly on the ETF side, and working on maybe launching some new products using our data, because we just believe that there's so much that's there, and ways to measure sort of the strength of theme in each individual company, that we can build something that's just much better, because of our proprietary data. So yeah, we are engaging in those conversations.
Are you aware of the Global Smart Commodities Group?
It sounds familiar to me, but I would actually be interested in any kind of ideas that you might have.
I'll hook you up. I'll hook you up with them. I'll reach out to you offline.
Oh, that would be great. Thank you.
Any other questions on any of the subjects, particularly cannabis? I'd like to see what the Boris Jordan tree looks like.
It's a thick and wide reaching tree, Mark, from what I understand.
Yeah, I bet. Anyone else? Including Buffalo and diverging economies, vaccinations. Otherwise, I'll be here tomorrow. We'll have prep calls for all the other events that are on the schedule and that are coming up or that are in your minds. So we're fertile soil for all of us here.